Streaming. Hey, we are. Okay, let's see. What's up, guys? We're back. This is Buttersmooth Crypto, and on today's episode, we'll be doing some live technical analysis on Bitcoin, Ethereum, and XRP. We got Crypto King here, my co-host now. He's not a guest anymore. He's basically my co-host. And we're just going to go over the charts and see where we're at right now. We're getting close to the end of the month, closing. And, I mean, there's still a lot of panic in the streets. So we'll see where we're at and let Crypto King take it over from here.
All right, so we're going to start here on Bitcoin on the monthly time frame and just really take a look at what we have going on. Let me adjust the chart for us so we could take a good look at it. So you could tell we have 4 days and 21 hours left until the monthly candle closes. And right now we're currently just below a trend line that I have drawn on the weekly time frame. You'll be able to see it in just a second, but we could zoom in and look here. So basically we have no wick to the bottom yet. So I expect, all majority of candles, 99% of candles have wicks to the bottoms. This is what we don't want, is straight to close here, open up the new month and just melt. So right now we finally found some support, if you want to call it that, on the monthly time frame. And if you could see here where I have the cursor and the dotted lines, you could see this is a level of relatively strong support. We have played as resistance here, November 2020. Then you could see here, December was support where we opened, wicked back down before we just went parabolic from there. And that's where we plugged in our highs to 65,000 on the first run. But let's stay down here and look. So you could see here, now we found it as support. We wicked below it, but now we're testing it really as strong support now. So really in the next basically 5 days. The next 4 days and 21 hours, we need to hold these levels as support, and we don't want the body to close below these two candle bodies. We want it to at least hold up a little bit, if not pull back to the upside, but that seems a little unrealistic right now with current price action and how the market's moving. So really that's it for the monthly time frame. You could see we're just hanging on for dear life. So now we will go over to the weekly time frame on Bitcoin. Give it a second. Let's adjust our charts. And this is where I have a majority of the Fibonacci and trend lines drawn. The red box of that was support in the past or resistant in the past, and then somewhat support, resistance again on the way up, tested as support. So it's just a level that I love. It's a level that I keep outlined right now. So you could tell right now that we are actually decently below the trend line on the weekly time frame.
So that's not good.
Right, it's not good, but we still have 1 day and 21 hours left to close above it. The problem is if we close below it, then when the next candle opens, it's going to be resistance now. You get what I mean? So the longer we go below it, it's going to continue to act as resistance.
So it's going to start losing momentum. The longer it stays on that path, it won't want to get up higher and higher. It's going to keep pushing down and down.
Right. So when we do pump up, regardless if it's, next week after that, whatever it may be, that's just going to be more overhead pressure, more resistance to the upside. It's not going to be as easy to pump up.
Okay, gotcha.
Okay, so from here, as long as we close on or a little bit above the trend line here for this current week, 1 day and 21 hours, then we'll probably bounce on top of the fib, retest it again before we really make our move up. But let's just look at Bitcoin real quick. We have our Fibonacci drawn, which is yellow. Let me adjust the chart so we could all see. So we have our swing high to our swing low, and I'm going on the wicks. So swing high wick to swing low wick. We have this current trend line in play right now. We're hoping that we close above it. And really, if we close above it, we expect a movement back to the 236 fib. Then once we get, above that, some closures above it, maybe retest it again before we move to the red box, bounce around 61.8, and that lines up with the trend line I have drawn here. So just imagine this trend line's drawn here. We drew this one in the past here. So once we got below it, when we finally decide to move up to the upside, it's going to play as resistance. We have the red box here, which is resistance currently, so that'll play as resistance. The 236 is going to play as resistance, red box as resistance, trend line as resistance. So the further down we go below the trend line, just the more hurdles we have to jump over to get back above those levels.
So it just expands the time period for it to get back up there.
Exactly. I mean, it just makes it harder, to be honest with you. So with Bitcoin currently, we're just hoping it stays above this trend line. And what Jonathan and I were talking about before the stream is if these levels don't hold, man, if this level of right here of the 17,200 mark doesn't hold, we're going to have to zoom out of the chart a lot and start doing analysis on the, first all-time real high. Then we're going to have to start looking at these levels, pre-breakout levels to find new levels of support where we could potentially go.
Is it fair to say that the first all-time high, the $20,000, that's support at the moment? Or it's not? No, barely. I didn't even hit to.
Yeah, so right now, of course, because look at the price. Okay. We're at 20,200, and over here, it's 19,300, 19,400, whatever you want to call it.
Yeah.
So this is acting as support.
Okay.
So we have these levels from 2017. We have really 2018 as well. We have these levels here from 2020 and current price action. So historically, it was resistance historically, but now it's retested as support. So, that's why I'm saying is if these levels don't hold, we're going to have to look at the 2019 area, the early 2020 area to find support where price will potentially go to. So for Bitcoin, that's all we're going to really look at for now to not make the video super long. So basically, these levels need to hold. If they don't hold, we're going to have to look back to 2019, 2020 levels. So the next pair we're going to cover is Ethereum. And Ethereum is still down a decent amount, but Ethereum has been performing very, very well. So Ethereum on the weekly time frame, I have the big Fibonacci in yellow drawn from the swing high wick to the swing low body. And then the white Fibonacci is just, I call it a fib extension. I have it from the most recent swing high, the top of the wick here on March 28th, 2022, to the swing low wick of June 13th, 2022. And I just have those really just to show, just outline levels of where we could potentially go in the shorter term, where we could come up. We're going to find some resistance here at the yellow fib. Then once we break above it, we know we have this red box and the 61.8 on the fib extension. We have the trend line here. It's going to act as resistance. So it's just, a lot of precautionary areas where we could potentially go. So again, Ethereum is finding support on the 236 on the fib extension, which is the shorter time frame. It's not all the way back here from late 2021. It's here in late March of 2022. So, the yellow fib is a lot more relevant than the white fib.
Okay. What makes you say that?
Like I said, because the white fib is from the most recent high to the most recent low. The yellow fib is from the all-time high to practically the most recent low. It's
that covers more area.
Exactly. So it's just, just more, a little bit more relevant, but the white Fibonacci will give us shorter time frames of where we could potentially bounce. But we are finding support on the white fib. So it's all about finding the Fibonacci that's in play the most.
Okay.
It's about finding the Fibonacci that the whales and market makers are currently using. So from here, looking at Ethereum, let's zoom out, make it fit in the screen. So, I mean, we have our high, we have our low, we have our lower high, now a lower low. So I feel like we need to make a lower high, which would potentially be this red box, really up to the trend line, really up to the 78.6 on the white smaller time frame Fibonacci, the Fib extension. So I could see Ethereum coming up here to the box around 2,500, really wicking up to maybe about, what is this, $3,000. It might wick up there, but I would expect that candle body to close down here in the $2,500 region, because this is strong resistance currently. So it played resistance. We broke above it. We chopped around a little bit. It was resistance, a little bit of support, resistance. Then we broke through, and look where we retested before it fully broke through. Retested it, came above it. And we never thought, like, if you had this outlined here, you would have never thought when Ethereum came up to almost $5,000 a coin, like, no, you better delete this box. You know what I mean?
Yeah.
You better delete this around 2,500. But then it came back as support. We bounced back up. Everyone probably thought we were moving here just to melt back down. So, I mean, you know, it has to be retested again. Since we broke below it, it hasn't been retested as resistance. So I would expect that movement. You know what I mean? So if Bitcoin starts to move to the upside a little bit, first target for Ethereum would be around $2,500 with wicking to about $3,000. For us to go for a new all-time high, the biggest area is here on the 61.8 on the yellow fib, around $3,400. Once we break that and close above it, then I would expect it to be retested as support before putting in an all-time high. And you could see we have the big movements here to 5,200, 7,100 on the yellow fib. So really, to expect Ethereum to go to $7,000, we need to get above the $3,400 mark and start closing above that. Get new people, not necessarily new people, get more buyers into the market, buying in, get that hype back around all these coins. And then, you know, we would have a new Fibonacci. We'd be able to draw new trend lines, things like that. So that's it for Ethereum. Ethereum looks good. Looks bottomed out. And again, just like Bitcoin, if we lose these levels here of the, you know, $1,000 to $900 mark, I mean, we have to zoom out and start looking over here. We're going to have to start looking at these levels from 2019, you know, $345. We'll have to look at the old prior highs, which, I mean, we're barely above. You know, from the 2017, early 2018 bull run, we're barely above those levels. So we would have to, again, look at the mid to low $800 mark, the $500 mark, and really from there, it just goes in $100 increments.
I think it's really important to point out how similar all these coins move. If people don't realize it, how we just looked at Bitcoin and it was the same play.
Right.
So, you know, that's what we say around here, you know, all cryptos follow Bitcoin.
Exactly. Everything goes with Bitcoin. That's why I do 100% of my technical analysis on Bitcoin and then take that bias into other coins when I do technical analysis. So now let's look at XRP.
Yeah, one of the favorites.
Oh, man, I used to fucking be obsessed with XRP. I loved XRP.
Now we're obsessed with AMP.
Exactly, AMP token. All right, so XRP, I have that Fibonacci drawn on the weekly time frame. We have our swing high around 41 cents. Swing high wick, I should say. Then we have the swing low wick around 28 cents. And then we have a trend line coming into play. First touch point is here on this red candle, 28th of December 2020. Second touch point here, July 19th 2021, and then multiple touch points here in late 2021. So really, I mean, I would expect this trend line at some point to get retested. The longer it takes to retest this trend line, the higher the price is going to be. You know what I mean? So realistically right now is if we went 1, 2, 3, 4, if we went another month without retesting this, that puts XRP at $1.20, $1.23. You know what I mean? That's unreal. That's such crazy gains from current price of 33 cents right now. But really, XRP is just like everything else. It needs to hold the support of 28 cents. If we don't hold 28 cents, we have to zoom out. Look at these lows of 11 cents. Look at some of these lows here, around 18 cents. Let's look at this right here, 26 cents. So, I mean, if XRP doesn't hold here, XRP to me wouldn't be a buy until 15 cents.
Okay.
That's where I would start entering XRP, but we're in the United States. We can't. There's very minimal exchanges that support the buy and sell of XRP currently because of the SEC case. So if we hold these levels and we start moving to the upside, I'll adjust the chart. If we start moving to the upside again, first target would be the 236 around 55 cents. If we are able to blow through there, it looks like we would find some resistance around these areas. These areas here. Let me just draw it real quick. Boom, let me get the box, the rectangle tool, and just look at it for a second. So really, I mean, we could just draw it from this red wick here on the March 28th, 2022, top of the wick, bottom of the wick, extended out. Then I would expect this level to be retested once XRP starts moving. So it's the bottom of the box is 87 cents, top of the box is 92 cents. So if XRP starts moving, we break past the 236 fib. Next level would be, high 80 cents, low 90 cents with a wick probably to the 61.8. Here, what does that say? 98 cents. So, I mean, that makes sense. That makes sense to where you would find some resistance at the even number marks. So $1 would be a huge level. So from current price, the 236 fib, that would be 64% gains. To the bottom of the red box, 157 gains. Top of the red box, 170% gains. To the 61.8, 191 gains. So there's big money in the market, man. This is where the wealth is transferred from the impatient to the patient. So there's no need to be scared of the market, man. Like, these are buying opportunities. It's not time to go run and hide, tuck your tail between your legs. These are buying opportunities that people fucking beg and wish for. Right? When we're up here, when the price is up here going sideways, super close to all-time highs, $1.20, people that aren't in the trade or are in the trade and just didn't buy a lot of it, they wish, let me look over here. I wish price would come back to 47 cents. I wish price would come back to 40 cents, to 31 cents. And look where we're at. I mean, we wicked below 30 cents. We wicked to 28 cents. So really, I mean, this is no time, man, to give your coins to the market makers, to the whales out there. They're just consuming all these coins that are being sold on these exchanges. I mean, be strong, hold that position. This is when you can create wealth for yourself, your family, your loved ones.
Especially, with such an upside. Yes, there's a lot of risk in getting in now, but at the same time, there's a lot of more reward.
Exactly.
You got to look at it that way. Like we just showed you, there's still so much potential to get 200x.
200%. No, not 200x.
Sorry, 200%. So that will be, so 100x is 2x. 200% will be what?
That would double your money.
Okay.
Every 100% would double your money.
So you'll triple your money, basically.
Right. So with what you're talking about, let's just draw this in. Let's do our long position from current price, because I'm only doing this right now because I did this on a trading view idea.
Okay.
So let's just put it to the top of the red box, right? And then our sell stop loss at 11 cents, which, I mean, you would be insane to have a stop loss at 11 cents. I mean, just look at that setup. That's a beautiful setup.
65% risk, right? And 172% reward.
I mean, just look at that. Why would someone sell right now?
Yeah.
Is what I don't get. When this is on the table, if you're holding an enormous loss because you didn't have a stop loss or you didn't know what you were buying, I mean, it's no time to sell.
No
time. I mean, you're just losing so much.
It's probably time to add to your bag at this point. If you have a coin that you're already in it, and you're already holding a lot of it, this is the best time to actually DCA, get that average cost down, and once it does pump, you'll get more reward.
Right. Now, real quick, so you would obviously not have your stop loss at 11 cents down here, right?
Okay.
So that's not a proper risk to reward setup, a long position to look at. You would have your stop loss right below your Fibonacci or your support levels. So these are the real numbers.
Okay.
I mean, look at that risk to reward. That is unreal.
Yeah.
So to say that you're scared and running from the market currently, that's just crazy to me. Like this is the time to buy to change your life. So, I mean, that's all I have for technical analysis.
And yeah, that's what we're looking for to do out here, trying to change people's lives, change our lives even more. I mean, if you take advantage of this, not financial advice, but just more things to think about. You know, we're not selling you a course. We're giving you information for free. This technical analysis took Crypto King years to learn. He was obsessed over it. You know, it might sound easy for him to talk about this, but it's because he has put in the time, the effort, and you're not going to get this effort in time for free anywhere else.
Right.
Okay, guys, let me see. Let me get back on the screen. All right, guys, we're done for this moment. We're going to finish this technical analysis video, and then we're going to come back in like 5 minutes with another live stream. And this time we're going to answer some more crypto questions. So peace out, guys. I'll see you guys soon.